So that's
You
another
never sell
13,
Hero
14.
Honda. You know, I always wanted to ask you this question. Today I'm getting this opportunity to ask you this question.
Yeah, I think we got to make country will come on the other side, in the sense that whenever the right now, we saw some kind of a concern, and a lot of institutional investors walked out, and because of the margin decline and Honda breaking away and things like that. But my sense is that maybe the franchises now minus Honda, Hero Honda, at least at this juncture, is looking a little weaker. But I'm sure Mr. Munjal and company will pull it up and make it even bigger force, not only in India but all over the world. Because India has now gained a global kind of scale of 5-6 million under one roof. So the cost competitive edge is there. They are known for engineering skills. So I hope these guys, they will be able to do as big a miracle as Bajaj has done in export markets. So I think still, now it will become much more. There is a potential of it becoming not only an Indian automobile story, but it could be a little more. It can get an international touch also.
So what is holding you back from selling Hero Honda? A, you don't have a good idea, or B, you have you love the management. You have faith in the Munjal family.
No, nothing to do with Munjal family, but it is all to do with the business and franchise. Where do you get number one company catering to personal transport segment, which has only 2.5 player or 3 player competition, and the penetration level is less than 10% in this country, and we are. Now it is a situation in next 5 to 10 years, maximum penetration is going to happen, and then on top of it you have the global opportunity. So this kind of scale, see, once you get brand equity, scale, and lower cost, it becomes literally an invincible kind of situation, even for the global measures to enter successfully into India. And with that scale and the cost structure and brand equity, when you move, people get scared.
How do you justify a stock like Nestle, which is trading at a P multiple of 30 plus, depending on the estimates you track, but it is still 30 plus?
Yeah, it is. Almost it is. As per our estimates, will do about 103 rupees this year, and
what, 40
is 40 times. So about 38, 39
That's expensive,
times.
very expensive.
Very expensive, measured in terms of current earnings, but underlying growth potential, quality of growth, the very, what I would say, monopolistic condition they have in the milk product, processed milk products in India. See, the way I look at it is that Nestle is doing about $1 per person per year in India. They do about $15 per person per person all over the world. They do about $90-100 billion for 6 billion population. So, $1 is pretty low. It's very low. So, can this company do about $10 billion in 10 years time and make a profit of about $1.5-2 billion?
How markets are now approaching consumption stocks. So, if you look at a Jubilant Foods, if you look at a TTK Prestige, Lovable Laundry, Page Industries, they are trading at P multiples of 30 plus, and companies are not going at that run rate. Is that a contra sell?
Yeah, some of the because this Indian consumption story has been excessively marketed, and there is clearly, definitely optimism and close to euphoria kind of condition is there. But which stories, one or two stories might pan out the way people are optimistic about, but not all of them. So it is question. That's why at least I have not bought into too many ideas. I am very kind of I calibrate whether to get into that stock, because once I get in, then I'll keep building it up. So you need that 10, 15, 20 year, 30 year kind of profile for those businesses, because if you buy at 30, 40 P multiple, if P multiple comes down to 20, even if earnings double, you'll be at the same place after 3, 4, 5 years. So you got to be careful buying at those 30, 40 P multiples.
The word margin of safety is the most important word for a stock market investor. Where are you absolutely convinced that market currently is offering a lot of margin of safety? It makes sense to be a perfect buyer, and if your time frame is 3 years and beyond 3 years, you will be a winner.
You are asking where exactly you are seeing margin of safety?
Yeah, where do you see margin of safety?
We just talked few contrarian ideas, no?
So do you think all of them offer decent margin of safety?
Definitely. Those.
And can I say central bank is the central one for you?
No, don't make it that big a kind of thing. But I bought decent quantity, and I'm just biding my time. Hopefully, I turn lucky and make some money out of that.
Gordon Gekko on Wall Street said that every man who's on Wall Street has a number. So I'm sure every man on Dalal Street also has a number. Do you have a number in your mind which you want to achieve? Everybody has a
No.
number which they want to achieve. Do you have a number in your mind?
No, I don't have any number in mind. I mean, I don't have number. I want to be in money management business for. If you ask me number, then I have the number of years I want to be in this. So that's going to be pretty long.
Raamdeo, millions watch you and millions they track you. What's the broader message you would like to send across to our viewers? The current market condition, a good opportunity, or markets currently are not offering a lot of opportunity?
Don't bother about timing the market. If you want to be a true investor, just get on to, if you have money to spare, long-term money to spare, get into the market slowly, buy things which you understand. If you don't understand the stocks, then take professional help, buy well-managed mutual funds, but don't try to time the market. I think it's the biggest biggest cancer of the market is timing the market.
So it's a downside in the foreseeable future for Indian markets.
Again,
10%, 15%. No, fundamental downside.
See, it's
not
difficult
about,
to time
for anyone.
Market downside and upside in a short while could be nothing to do with the fundamental. You know, I mean, just the foreign. No, if something geopolitical happens globally, 9/11 kind of thing happens somewhere in the world, and the market just goes down by 30-40%. You can't stop it, and so could be the rise also. I mean, if there is if the US markets or developed markets slow down post QE2, and the world decides that emerging markets are the toast of the season, and they just go rampage and send 25, 30, 40 billion dollars here, you could see some amazing numbers in terms, because you have the earnings. 1,050 rupees we have the earnings for the current year, and next year projected is about 1,250 around. So there's no dearth of earnings, there's earnings growth. The issue is whether you want to give 15p, 20p, 25p, 30p. So in the short run, the differential is that the change of the perception, and that perception could be completely liquidity driven.
Has the perception changed enough, and how much of bad news at these levels is factored in? I know it's a subjective question.
Yeah.
We will get different answers from everyone, but what is your own view?
I think this headline driven pessimism is clearly there, even in my mind. I mean, I look at numbers, actually if you go by what the analysts have projected for at least 4 quarters, you should not be worried. You should be simply buying into the market. Because if you are getting at 1250, even if it comes to 1200, potentially you will see 24,000 sometime during the year. So, but yet when you open the newspaper, you open the television, the kind of news flow you see, this guy is in Tihar jail is full, you know, so house full. So I think that, and then this infrastructure mess up, you interact with your infrastructure every day.
Yes.
You know, so I think those things unnerve you.
Good day, Raamdeo Agrawal. Good to have you on ET Now. Thank you for joining us. Pleasure having you as always on the show.